Welcome, this is Anton Höpfel for Manapa, and let's talk Bund. This is the recap, the debriefing for the morning session of the Bund Future. Today is September the 2nd and Monday. Alright, first the hypos. I said, hypo 1, we have range long levels, the lower pre-market volume edge, and yesterday value area low, this is the level around 91. 178, 91. Range short level would be the upper pre-market volume edge at 179.04. Alright. And then there's hypo 2. We say hypo 2 for me short if increasing sell volume into the 91 level and weak pullback holding. Sell volume need to hold on into 89 as well. Then the targets are 178.83, 178.74, so this area around, and also 178.63 if we see even more increased sell volume. Hypo 3, long only for me, if increasing buy volume into the higher pre-market volume edge. That means at 8.22 it was 179.04. That means weak pullback then after strong buying volume toward this level, holding, and targets would be then 179.12.16. If increasing buy volume into 179.20 even, target would be 179.26. Here you can see the areas where we are at the pre-market and the overnight session. And here are the levels for the range short, range long, continuation. And on the short side, if we take out the volume edge around this 92 level, 91, it's also in pre-market, but also in the overall volume area low from yesterday main distribution. Yesterday means last trading day. This was Friday. All right, then let's have a look how the day unfolded and developed. What we see is that in the morning, and I will make it a little bit, put it a little bit to the left, the chart, so you can see. Here's our pre-market volume edge, and this gray rectangle here is then the distribution edge from yesterday. So this was my mark. And you see, at this moment, starting at 9 o'clock and 18 minutes, you see increasing sell volume hit the area of our interest. So some kind of the list. The list from the big picture, not here from the open range. From the big picture, my mark. So we have trigger 1, increasing sell volume into this level, and then the pullback weak. That means still sell pressure, no rejection from the bulls. One can get into this trade here. There was opportunity 1 and even here opportunity 2. I didn't got it because even though price pulled back to my entry level at 90, I showed you live, I didn't get filled. That's the exchange. If you're first in, you get filled. But I was standing in the row behind this guy, so there were about 150 contracts, I think, traded, but without me. Anyway, I guided through the trade. If you got in here at the 90 before me or at the 89, a little bit more expensive price, I told you at this very moment, our stop needs to be, for me, 2 ticks above the separation area where everything bears started to control. That means this area here, so stop would be for me at this moment at the 94, 95 level. So if you have entered here at 90 or 89, you would have a 5, 6 or 7 tick stop, and now at the downside our profit areas number 1 would be 82, and then also the area around 76, which we wanted to see, because this is then this separation, this lower volume area starting here at the 77, sorry. Anyway, we take a look now what happens. The trade reached target 1 and also the target area of number 2, and I said if you stay in with a second position because your target number 2 is even a little bit lower, I told you at this very moment my stop would be around this 89 level, because this is where we see the pullback and before people started initiative in selling. So we see they tried to play it on the downside a second time here and a third time here, and you see already that the pressure here of the sellers got absorbed at this moment starting. Even delta is more pressure, still pressure in the books. You see it got absorbed, especially at the level 83 and 82. One could see that the order book showed immediately refilling of the bid. And we can have a look what it looked like when we're scrolling back and take a look into the footprint chart. So have a look here. As we're reaching this area of interest at the 82, 83, you see that this major selling into this level, all the time selling, selling, selling. You see even here selling at the 82 one time, and even here at the 80, at the end you see that this material here got absorbed of the selling. Then they hit the bid so hard that they could put it down the price even to 2 ticks, but you see immediately also market buying coming in. A little bit calming down, again testing the low, but you see selling is now getting less and less, 246, 72, 30, 20, and then market buyers coming in. So we're still not broken the structure. You can still stay within this short trend trade, but we see already some signs of, let's say, trend may be over. What you're not looking, or what I'm not looking, this is not my play, and I don't think this makes sense. We don't look here, as it is already a short trend, we don't look here for a reversal trends. This is very important from our perspective. Our strategy don't work with this. But what you can see now is they put out again some longs that were accumulated and trying to play the downside. You see this here, boom, a lot of selling taking place. But overall, you see, selling disappeared. Sellers disappeared below the 81 levels. So we stay here in control. And now you see, I told you at this moment that if we see that this structure is broken now on the upside, we may see that they get back to the selling control level, the 89 area. And then after this, if they break this with a new initiative buyers coming now in, that we may even see the yesterday value area low again. This is no reason for me to get into a long trade because risk reward is not super, and there's only a small range traded this morning where I would say I don't want to look here for a long because target is already very close. But more important for the guys or the people who were in the short trade, I would think now if they break now the structure with an increase of buy volume now at the top area of the structure, we could think about now if this happens, and this happens, boom, here at this moment here, that you now may think of when they pull back here, see this, they pull back, and we see now again, after they play in the range, still interest in buying. At this moment, when your trade is then on scratch of your second or third position, I would leave and secure, after you have secured your profit, I would now leave this last position, your possible home run for the downside. Because you see here, boof, it is broken, the structure. The sell control level was taken out. Alright, they're trading now around in the range, and at the end you see the level where the initiative started when I said this is the mark when the structure is broken here, this level here. You see that once they're coming down to this level, again buying, responsive buying now starting on the lower side. And at the end, we're just reaching exactly this level from the open range from the morning. And as I told you, this is a very close level. I wouldn't go here for the long because target, you have to then be sure that you take out and take your profits already here. You see, they could not extend the price more than this. This was then the last moment of the day, but as it was already very, very late, you should be lucky to make profits with a good mediocre short trend here in Bund, a little small move. You can make with a one contract 6-7 ticks, with two another 10-12, so that means about 20 ticks. The third position didn't give us anything anymore, but you can avoid a big losing trade because you have everything in control. So at the end, you made some nice profit. We always talking only with 1 or 2 lots and with one contract or then 2. Even with one contract, you could have made good money. We talked then live in the screen here, of course, what would be watched for responsive selling already here at the volume edge, and this was also happening here. This trade wouldn't pay you because they see as they're playing the short here, responsive selling number 1, responsive selling number 2, even here, you could have entered here then cheap at the 96 level, and then your target area, I told you, would be already here at the moment POC. This is not a good trade. So if you trade this, be sure that this is the opportunity also for people who want to see them guys trapped, taken on this cheap range trade here. I called it cheap, but it's just a bad trade. Anyway, you see it didn't work out. The people that sell got absorbed. They didn't let them go deeper, so that means now you need to already think of, do I leave this trade? And as you could think, maybe you got stopped out because this trade didn't work. Even though this could have been a lucrative trade when the risk reward would be good, would be better, and the POC of the moment wouldn't be so high and close to the entry area. So this was not giving. So you should get stopped out then, even with a lucrative trade, because they were just fishing for liquidity. Because look what happens. This is the volume edge from the pre-market, and they took it out with high volume. And now I told you beware, because this here, when they took it out more than one tick, this happens at this very moment. See, this is only a one tick. I don't rate this as taken out with volume, even so volume was good. I want to see that they take it out at least 2 ticks or more. That means a really breakout. Boom, this happens here because now we are 2 ticks up. And now we wait for the pullback scenario. And the pullback tells us that at this very moment, it looks like, wow, this could be a wonderful, cool long trade. But I tell you something here. Remember where we are and look at my big picture preparation. For me, this is no long mark at all, because the range from the pre-market provides another higher edge, and I think this should be first taken out before we get into the long. You see this from my pre-market preparation and the big picture. I told you long only when we see inclusive buy volume into the 179.04 area. So this is very important. At this moment, we are at 178, 98, 99, 179.0. That means we are not at this level where I want to see this behavior. So this, watching the market doing obviously some very good weak pullback, taking out the high, now trapping you in a trade, in a buy. Yeah, trap the buyer. So this is worthless. This is always when I say you have to watch and look for the triggers also in context. So that's why, and I told you already live, so no mistakes can happen here. I already told you live, at this time and at this level, I'm not watching for a long, I'm only watching for a short. This short but failed, so you had the opportunity here, but I told you also I will not take on the range shot because the POC and the profile is so skewed to the upside, the volume profile. So this was just no trade opportunity then. We're not getting then, you have to learn and build a mindset and say that's okay for me. If you're bored and then trade because you're bored and want to take some place, even though this is not prepared, then something is wrong. You shouldn't do that. And then you have to make on your mindset. Find acceptance for the OPA patterns, for example. But anyway, so people who bought here because for them it looked good, but on the wrong spot again, too low, got trapped. And you see now how the buyers, the guys who trying to buy here were only a minor minority of the people who are. So they were all trapped now. There's nobody more interested in buying above the 97. And if you look into footprint, you see it here. See it. What here is getting, what people bought. Nothing. Almost nothing. No imbalance here. Nobody else. So all the people knew at this moment, fuck, I'm now trapped. So now some bigger guys coming and already say, hello, I kick you out of this. And you see then some people here already again tried because selling first got a little bit absorbed, passive. Some people bought again and we get back to the top. And now you could think if the risk reward would be good, if it's still not super good because again, POC is so close. This is not a super packed range short, but it was at least an attempt because we see delta divergence. Once we hit the target at the top area again, see how weak delta is compared to this here. You see again now starting responsive selling. And now if you see this, you can say now, okay, I enter, but beware. This is only a scalp trade from this level 97 down to the 91. And this is what you got then. You got a trade and you hit the target here at this moment. So 91 was reached, but you also see they sold quite hard. And it took some time because there were still people who, from this area here, when they controlled, get into buying, the bulls, they controlled this level here, and somebody didn't, of course, that want to get stopped out. But at least we're reaching target. We even got to the other side, and at the end now, at 12 o'clock, when the session for us in our stream here is over, you see we got back then to balance. So this was the morning session. I think very interesting, and let's say a good day, because hypo 2 could be played with a very, very good risk from the minor picture, from the micro, and the reward from the big picture. Another good trade, and I think a lot of good stuff to learn. This is Anton Apfel for Manapa. Thanks for watching.